So Microsoft just had their latest earnings report and the share price took off by 6% in one day. Now, a few people out there, including a YouTube channel or two that I watch, have said that maybe analysts are setting lower expectations, so companies beat those estimates on purpose and then the share price takes off.
Are you kidding me?
So I'll talk about why that's probably not the case, especially with Microsoft, and I'll break down that latest earnings report. So first things first, let's jump into Tykr. We can see Microsoft is a watch. The score is 67 out of 100, which is pretty good. The margin of safety is 0%. What this tells us is that EPS, that profitability, is not growing that fast year over year, but we'll take a closer look at the quarters. Now, a key driver on that 6% increase with the share price was due to the earnings report. So going over to the Tykr earning calendar here, you can see that the estimate was 265 and the reported came in at 299. They beat the estimate by 12.8%. That's outstanding. Now, here's something I want to take a closer look at, which is going back to what these analysts are saying, criticizing other analysts about, hey, what if we set lower expectations and we beat those expectations, and there you go. You have a good earnings report. Well, if you go to the financials tab and you go to net income, we'll go to quarters here. You can see the net income is increasing consistently. We're going back to December of 22. We go from 16 billion up to 18 billion, up to 20, up to 22. Consistent growth quarter over quarter. Now with the EPS, it'll be a very similar story. EPS is just net income divided by outstanding shares. So looking here, you can see we're at $2.20, up to $2.46, up to $2.70, up to $2.99. These numbers don't lie. We are seeing the profitability of the company increase quarter over quarter. That's incredible for a company of this size, that's this big. That tells us that no matter if we're hiring more people or adding more liabilities, that's typically anything that's an overhead like payroll, but it could be other things, and especially manufacturing companies. It could be manufacturing equipment, could be real estate. This company continues to increase revenue no matter what. We're going to get into those numbers in a second. And speaking of, let's get into those numbers. So jumping over to some of the highlights, the revenue, and these, just to back up a second, the numbers I'm going to give you are a snapshot of Q3 2023 compared to Q3 of 2022. So when you're reporting your results, like especially your EPS and your revenues and other numbers within, a lot of people want to see the comparison to the quarter or the same quarter a year ago. Usually at the beginning of the year, you're going to do a roll-up of the overall growth rates of the previous year. So we'll see those numbers in 2024, pretty much a roll-up for 2023. But anyway, here we go. So revenue estimate was 54.5 billion and it came in at 56.52 billion. Revenues increased by 13%. Net income, this is the big one, net income increased by 27%. Again, this is Q3 2023 compared to Q3 2022. Then specifically looking at Microsoft Intelligence Cloud, which includes Azure along with the consulting services of that division, that increased by 19%. Then we get to Azure in itself, saw an increase of 29%. That's huge. And get this, Azure, powered by OpenAI, now has 18,000 customers, up from 11,000 customers in July of this year. That's huge. That's a massive growth with just that segment alone. Then we get into the productivity and business segment, which includes Microsoft Office 365, LinkedIn, and Dynamics 365. Dynamics, if you don't know, that's a ERP. It's a large enterprise software. You can do certain things like CRM, which is pretty much customer service and sales. You can also do billing, you can do taxes. It's very robust, large enterprise platform. That increased by 13%. Windows operating system increased by 4%. And this is big news. This took forever, which is the acquisition of Activision Blizzard finally went through. The acquisition cost was $68.7 billion. So good news there, especially for you gamers. That's going to take Xbox, all those games. It's all really together. So releasing, you could call it like viral video games, is really hard because you're kind of shooting arrows into the dark to see what works. You have to be a little further along and spend a little more money than you do with software. Software, you can kind of put out a cheap product like an MVP, kind of test it with an audience, see what they like, see what they don't like, and then make iterations. With a video game, you have to put more time and energy, more resources into a game to see like, hey, does this really serve the market? Are people going to share it with their friends? Is it going to become viral? And now Activision is going to have more capital they can use thanks to Microsoft. Okay, let's jump back into Tykr. We can take a look at the returns. As of late October of 2023, as of the recording of this video, they are up 37% for the year. To compare, the S&P 500 is up about 7%, so they're very much beating the markets. And then if we jump to the 5-year return, we can see the stock is up 217%. But let's drill into the 1 month just to take a look here. We can see since that latest earnings report, they're starting to take off a little bit. This might be a good time to buy. I've been holding this stock for many years. I think it's a great company to invest in, a lot of revenue streams. But when you have a great quarter like this, especially when it's been a tough year. There's a lot of companies that have struggled through the recession or bear market of 2022. It's good to see some companies continuing to come out with some strong numbers. I'd love to hear what you guys have to say about Microsoft. If you like this video, hit that like button. If you want to see more like it, hit that subscribe button. And if you want to find some good stocks and, of course, avoid some bad stocks, I welcome you to join Tykr for free.